Hello. Hi, good. How are you? Okay, just let me check that I have my. So you can hear me, right? Testing. Okay. All right. Cool. All right. Let me share my screen. You're back in Bali now. How was Australia? All right. Yeah, I think it is possible. Now with prop firms and stuff, it is. I mean, you can definitely make a good living. I was watching one guy on YouTube as well. He uses ICT concepts, Jade guy. I mean, trading quite a long time. It's quite popular. He's doing like 400,000 a week or something. Well, it's not. At trading you gotta wait for the right conditions. It's not always there. So anytime someone asks how much you make a day, even asking how much you make a week is also it can vary, right? Yeah. Yeah, I mean, just even supplementing a little bit is making a couple of grand, a few grand a month is enough, much less, what more, making a half a million a week. But yeah, you got to be comfortable with that risk. I mean, it's definitely possible because you're just scaling accounts, and once you're kind of comfortable and found your ground, you can do that. Okay, so you can see my screen, yeah. All right. Okay, Euro NU. Or okay. Well, we'll look at the dollar index first, right? Because we always start with the. I mean, it's already Tuesday. Um, yeah, it's already Tuesday. Yeah, I was looking at NU. To be honest, I had a nice short, and I spooked myself out of it a bit because it came all the way up, and then it just hit the. It always hits the target, but sometimes I get if I'm busy or something, I tend to see price moving up, and I can't be at my, I can't monitor, so I just close it, and yeah, it is what it is, right? So dollar index, yeah, I expected that we came into that. So there's so many shades of colors here. Let me just kind of. I can't even remember what this one was. Let's get out of the way. So it's on the 2 week. Yeah, we had this 2 week inversion. Yeah. Um, we didn't come down here on the dollar index futures yet. As you can see the gap here. If there's an actual gap between price, normally I don't know what ICT does is he takes the whole candle, not just the wick. He'll encompass that volume gap as well. But then it's a huge gap. It didn't come into this gap. I guess this candle, small gap, but it didn't come into this inversion gap just yet. Sorry, on the futures chart. So I came pretty high up on the futures chart compared to the dollar index. But anyway, it came to around OTE level, right? Structural CB. It's not annotated here because I actually did this annotation before I even labeled them as structural and candles. So we had the structural CB. This became an inversion gap, right? As well. I mean, you just follow each and every single candle. I mean, if you can do that, then there's like tons of trade opportunities, depending on where you are in price. So we came in there. First indication of a change in the state of delivery was this candle, right? This bearish. we came all the way down here. So now we're kind of, this is our R2F gap as well. So we're kind of sandwiched in between, right? So where we're going for sure, nobody knows. Obviously this whole area is stronger. You know, I think I talk about structure and this small area, you know, what's the word? Effort versus like result or cause and effect. Obviously there's a lot more strength in terms of you know, the expansion, and then requiring a more of a retracement, right, rather than just continuing up. But yeah, I think that was, you know, the time, roughly the time Trump was getting re-elected. You know, perfect time. Next candle, we took out the high of this candle. One thing I'm noticing now more, and it's my brother who actually pointed it out, these candles with very small wicks, or even no wicks, price tends to come back to these areas, and I think it's something you can take note of as well. It's quite important, so you know, you can note that down so you can study it. But these candles without much wicks or no wicks at all, yeah, they're very suspect of can't find, well, even this one, right? This candle comes all the way down to this candle over here. So you gotta watch out for those. It's quite interesting, and I'm slowly like taking note of them as well. So we do come up above here, but we close here on the, okay, we're not closed yet. And then obviously a big expansion, maybe news. All right, so now we have this inversion gap there on the R2F to be used to be go lower. Obviously it's good to have context. Such a close, we close pretty fast, right? Compared to going up, you see the wicks, a bit of consolidation. I mean, even on this time frame, I can see probably a trend line that's sticking to the thing for some reason. You know, a channel forming, and then breaks down pretty fast. You can tell it's like one manipulation up and then down, taking out the high and then coming lower, right? So yeah, only time, you know, that maybe suspect you'd be more cautious of that is if there are obviously like so many equal highs up here, then you kind of you know, you be a bit careful and maybe wait for that long. But we do come into that and then quickly drop down. So it looked like, from that candle forming, it looked like a small consolidation up and then drop. Bounce there in the middle. Oh, okay, it came up again. Whoa, okay, this one, like no wick at all. I'm not saying that it might come back there later, but this is such a, yeah, you see that candle. It's a very low close, and it wants to leave there quickly, right? So not to assume that it's going to come all the way up, just to, because it has to take all that out as well. But yeah, I was expecting or waiting for it to come to here. It came into the gap here on the 2 week. It was kind of already used as a candle, OB. Is there a 3 week gap? Which one? This one? Yeah. Yeah, I mean, they got used in this candle. Then we close below it, and then we use it as an inversion now. We had a green candle, created this order block kind of thing. Another thing, yeah. ERL of what? This one. Okay, let me go back and see what you're talking about. Obviously we came in and then we closed up here, right? Quick, and then a little bit. I don't know. There's something kind of in the middle. When there's a lot of structure, like this whole consolidation, and then when there's kind of, you know, a couple of candles, and then you get an order block. So it's kind of something in the middle. It's not like the immediate candle, but when there's a quick change like that, then I mean, I like those because they're clear. You get a bullish order block, then you get a bearish order block. then it's like, okay, you're not coming back up, not now. Anyway, right? You got something else to do because you quickly made that kind of change in the candle order blocks. So yeah, when this closed down there, now we can use that as an inversion gap. And it came down, a little bit of manipulation, one more time, and then big drop. Just here's kind of, you imagine this green candle. People are okay. The 2 week close. I don't even know how many people watch the 2 week, but maybe there's 2 up candles on the 1 week, and to a lot of people that's okay. This bullish. It's a green candle. They're waiting for the green candle. That's like it's like a traffic stop. Green light. Okay, go long. Oh, red light. Get out. Go short. So they're just kind of chasing those. And okay, quick drop down, and came into there. There's also a 3 week. When does the okay? So now we're here, 2 week, and the 3 week. Okay, so it came down. That's weird candles. But I think when it came down here, it was coming into the 3 week, right? Because we have this 2 week here that was already used. Yeah. But there's a 3 week gap there. I think that was the one that was, unless the candles are messed up. It's a balanced price range, also on the monthly as well. So let me remove this. All right. Okay, interesting. Yeah, so now we have this potential inversion gap on the monthly, right? So if the dollar goes up, everything else should go down, and I think it has been going down recently anyway over here. But we came into that, and then we had quite a reaction off of it, and now we created this. It's very close to this one, so normally I'd usually be comfortable taking a short, especially if there's this trendline liquidity there, right? If we were in that candle, most likely we'll come into there. Oops. Because we also came into this 2 week, so 2 week is strong. We're gonna get quite a decent reaction on the daily. If you're on the daily, okay, you get a decent reaction on the hourly. If you're on like the 12-month, you get a decent reaction on the higher time frames, but on a daily, maybe you get some, weekly even, you get some consolidation, depending on the gap. So where we now, let's have a look at this on the lower time frame. All right. So we came up, pew, and then we came down. And over here is when it broke down, and now we're here, creating these equal lows as well. Okay, so it's always creating these levels, and then so now we are retesting this. We retested it once, kind of here, and then we're retesting it again on more of a, these actual time frames where you can actually draw a line, right? Rather than a single. Maybe I'll use this too. Yeah, then it's testing it here. Maybe one more time, or we may just move higher first, right? Because this tap into this gap is pretty shallow, and pretty shallow. So we may get an additional move up, but we have to look at the PD arrays. So nothing down there at the moment. So it's still a little bit messy. Nothing super for sure. I think we do have some liquidity down there, and such a big expansion. I think we want to come lower, right? Bump up, maybe into that yearly gap that we've talked about before. And on the yearly, it looks like that. It's a yearly order block, but we also have the CB structure. 12 months, the furthest time frame we can go. We may get a tap down there and then expansion, or who knows? This is as far as I can go. And we also had April is a new 3-month, I believe, 3-month candle. Yeah, just over there. Yeah, not too sure here. We're respecting this. We expanded up, so we, with more information, we could, you know, if price seems to be wanting to move up, maybe it has to make some structure first on this reasonable time frame, right? This on this. So it has to do something like, you know, make a low, then break structure, and then, you know, something like that, change in the state of delivery. You know, a candle breaker on a different time frame, but I think maybe one more low. So I think we got that down for, and we have this low here. Just to always take note of these unmitigated lows. Those are times where we can, you know, use some traditional support and resistance kind of when price gets there, because usually it will come to these swing lows, and it's also a breaker in here. It broke down and then quite possibly, but we may go down first. And yes, where's the monthly? The monthly is just above here, so it's probably in there as well, coming up again. Okay, so let's go quickly to the okay. Let's have a look at maybe New Zealand dollar and the short I had and the short I got out of. I had a lot of drawings on here, but yeah. Let me see if I can find it. I think it's this one. It's you can have a look on my screen. It has a lot of things, and I just disabled pretty much everything and just kept it to this because it highlights the whole box for me. So it has this, yeah. Yeah. Yeah, there's some that some absolute individual preferences, but you go settings up there. I mean, this one has a lot of, you can, there's a statistical table and warnings, and I don't know what, it's all that seek and destroy profile. But I just use it for the kill zones. My own colors are, I don't know if this is the default colors, but I'm very used to Asia being yellow. Must be racist or anything, but London is green and New York is like blue. I don't know, I'm sure you're used to this. Let's see where New Zealand dollar, okay. Yeah. Yeah, I mean, something very common is, of course, the 3 a.m. reversal. I mean, here you get the reversal, right? Trying to get in before that is like, it's torture, right? Because you're trying to get in, then you're going to the even lower time frames to see like what's going on in structure, and you're just getting like, you get lost in limbo. But a lot of the time, 3, yeah. Most of the time you get something. Yeah. Yeah, this is the one I actually got flooded out of. I was in there, and then it was like it was coming up, and is this New Zealand dollar? Yeah, I wasn't able to watch it, and I didn't want to like lose all my profits, but I got in here somewhere, because there's this move up. I think there was news. Okay, created these equal lows down here conveniently, and then some news event shooting up. Then I was, I had this, the gut feeling which comes from experience, and it came into this, I think 6 hour CB. Let's have a quick look. Yeah, 6 hour CB, and you got this whole trend line building up here, right? This would be this green candle, and you have this whole thing being built up here, bounces into here, and now it's it's usually time to get it now. Not usually not to bounce up, and there's a gap here. I'm sure there's, of course, you look for different confluences, but I was targeting. I think it was like here. There was something on the I can't remember, it was the 8 minute. Was it 8 minute? Well, on the 6 hour, it looked very good, right? I think, yeah. 6 hour, we had this nice, this clear kind of order block, which, I mean, it's very clean. It's super clean. We had a premium. We expanded up into this weekly. I believe it's a weekly gap. We can have a look at it. It's this orange one up here, a little bit into this overlapping volume imbalance. We took out this descending trend line. Where is it? Was this the one? Something like that. And faking the sentiment for a while, reaching into that inefficiency, very bullish, right? At that point, okay, nobody, if they're not watching these kind of PD arrays, then they think, okay, it's really going up. It must be wanting to go higher if it's really going up. It comes all the way down and bounces on this trend line, bang, bang. It's kind of like a ball bouncing, and it's just losing its, momentum before it stops bouncing, and then it drops, right? So there was a news. I can't remember what news it was. Gone somewhere there. I don't know if I was looking at the 15-minute order block or not, but around there would have been, ideal to possibly take that manipulation move. But you can see it. Even New York has its own 8:30, and then 9:30 is when the stock market and equities open. 9:30 a.m. New York time. At 3 o'clock, you do get a nice move. It comes all the way down. It gets kind of scary, but then you can manage to catch that. There's nothing too clear here besides the 6 hour structural CB. And then there's a 2 hour here. Is this the one? I had another position. I got in here and it stopped me out at I trailed my stop to break even. Like, I can't remember what. It just came in and stopped me out. And yeah, it's a weird phenomenon. I don't always trail my stops to break even for things like that. But yeah, it was very, every time I do, it comes up to my. But something else you can note as well is, you see this low, right? This low here. This is a swing low, makes a high, and there's a high. It doesn't take out this low yet, and then it makes this high, and then it takes out this low amongst all these other lows as well, right? So a lot of the time, price will come to these. It'll come take out the intermediate high or short-term high that took out the low. But you gotta like observe where is the high that took out the low, because sometimes it doesn't take out the low, and then you gotta take note. This one, yeah, a little bit. Doesn't do it all the time. Like, let's say it comes all the way down here, and it doesn't take out the low yet over here, right? So you have to kind of observe which is the swing point that's taking out the low. And a lot of the times it'll come in and take out that. There's also a CB on the 2 hour here. As well, create this 2 hour, and then retesting this trend line as well. So it's quite a few confluences, and it just melted. It melted away on the 6. There's a 6 hour there, and I also targeted here because this 1 hour. This is the whole 6 hour, and this wickless candle over here. Okay, so I targeted down there as well. Yeah, unfortunately I couldn't catch this entire move. For euro I also took a no, sorry, yeah, right, sorry, it wasn't New Zealand dollar that stopped me out at break even. It was euro. I think it was euro. Was it? Yeah, I think it was euro. Gosh, for the life of me, I can't tell. It might have been. Yeah, I think it was. I think it was this one that maybe stopped me out. Because this is like the order block, the actual swing high. I mean, this one's kind of. It's not really not really a swing point, but this actually makes more of a swing point. That takes out the low. It comes all the way there. And we can look at the most recent one right now. Okay, good. All right. So, what did I say we were anticipating for dollar? Higher prices or lower price? I think I'm expecting a euro to go higher. So dollar eventually, so dollar to go lower, and euro came. It's a bit messy of those. What do we have? Yeah, we had that big expansion up week 1, week 2, and then we expanded down into this. Three week, right? But we had quite an expansion, so it's okay to cool off a bit after this big candle. I mean, all the reasons that would make us, blow our accounts and lose money. Exactly why things would happen in the market. So you can imagine if such a big expansion, everybody wants like, let me get in on that. It's moving so fast. If I can just take a little bit, any high, I'll take profit at any high. But then their mind starts like, oh, maybe I'll get maybe the next high. It starts coming back, and then I just very intriguing. But this whole 3 week candle after that has been, I mean, it's just a doji, right? It didn't go anywhere. If you open a trade at the start of the week, then you closed it, it would have almost been in the same place, although it moved like that, right? But quite interesting. I mean, because we're watching each candle and it's moving from one area to another. So we close above here, inversion gap, 1, 2. That's what generally we would be expecting, right? Because we close like this. So this would be where we bounce our support, and that would be our target. And pretty fast, touches it, and then boom. And then we turn into a doji, and now we're in the 3 week candle over here. On the weekly, this order block, oops. I mean, we are still in this inversion gap, so I think we'd be moving higher. We came all this way, and look at the time we spent down here, right? 1, 2, this arrowhead of a consolidation, and then big move up. All right, so spent some time down here. It came down pretty quick, spent some time, and then it left. So yeah, nobody on both sides were given much of a chance, and maybe that's the purpose for a lot of these, like turtle soups and basically the springs, right? They're not all they're meant to trap traders on the wrong side of the market. One more move down and boom. So I don't anticipate this coming too much further, and we have this breaker, tall breaker on the left. I think we'd possibly come and retest this trend line, and then we see what we have there. Got some imbalances here. The structure, this appears through it, wasn't too much, right? It wasn't too much. We're still respecting this order block. So, taking this candle bearish order block short is not something I would do, and aiming for ERL, not what I would do, right? Based on, you can go lower time frames and take those lower time frame moves, but because we're in this inversion gap, we're in this busy and this big expansion, yeah, of course we have to apply some additional kind of analysis, and sometimes you just gotta wait, just so people can get screwed, and then when it starts to move, you can get back in. I wrote there's a 2-day here, very small gap, very small. It may go for that. Just to note, it's also equal. On the daily, it's overlapping. So this is 12 hour. We had that. This candle, and then 12 hours not over yet, right? Still 3 hours. We do have this descending, ascending trend line over here. Let me just put this to the right so I can see. I gotta hide all these. 8, 4. Right, so have a look. So what time are we at? We're almost, I think 1 hour is 1 hour behind, right? New York. So, well, you should be on the same time as New York. So pretty easy for you. 12 to, 3 p.m. is 3 a.m. If I'm not wrong. Yeah, with this buy side here, and not to mention this swing point, we failed to close above it. Okay? That's an indication also of how we view like maybe a breakaway gap. It closes above it. In this case, it's not closing above this high, which indicates maybe a run for opposing liquidity or back to inefficiency, which it does. Taps on this line, comes up to this. I don't know what that is. Okay, there's a two hour here. I don't think we need that anymore, although I mean, okay, it is still a breaker, but cutting through all these wicks, sometimes we can view it like that. When there's so many wicks and it looks messy, but there's a breaker hiding in there, at least it's still kind of clear, right? That looks messy. That looks scary and messy. That looks a lot more. Hey, breaker. Okay. But the wicks, my God, you see some of them. Okay. All right. So let's look at this morning and what we can normally, anticipate. I'll turn off the. Should I? Okay, New York came all down. It hit that target. Maybe there's the 8-minute here that I was looking at. Yeah, this right. This is what I was targeting. So it wasn't New Zealand dollar. 8-minute R2F here. Sorry, so messy. At that point, this whole big imbalance down here, obviously. So, and this is the only gap, an R2F gap. It looks pretty clean. Find something that looks clean, most likely it will come all the way to that area. Maybe just with some experience as well. So get rid of it now. And what is this? Let's get rid of it. And this whole gap was the 3-way. Let me just get rid of this on these lower time frames. What was it? So we had this, right? Go back further. I mean, that's why we gotta wait for, at least wait for like 12 o'clock, which is the true day open, right? If not, like, okay, you wait for 12 o'clock will be 12 o'clock for you, yeah. If not, 2 o'clock or 3 o'clock. 2 o'clock usually makes a run somewhere, and 3 o'clock will be the real, say real, but the one that kind of moves most for London. Like here you got 2 o'clock here. It makes a run for the 3 o'clock where the buy side liquidity is, right? And then we break down. Okay, and then you see something like this, 3 o'clock. We took liquidity, you just swing above Asia. All right, let me get in there and then target something, right? Let's see what it does. So we open, we use that candle, we trade into that breaker, we break down. You should you can, if you have an expectation, like here this consolidation, and then it comes up into here, then 3M is like here. It's not exactly at 3M, a lot of times it is, so between 3 and 4:30 sometimes. It's when you get the move. If you just look in the indicator, sometimes you get weird stuff like this, and it's just, sometimes it happens in New York, right? You get a London that's kind of consolidating, maybe moving a bit. Those are the times like, okay, you wait for New York, or you wait for the news. You just gotta see where's your liquidity. Equal lows down here, we tapped there. Asia took it out a bit. We expanded up. A lot of consolidation here. Just don't find a move yet. Maybe in the breakdown, or you just wait for the, I think around 7:30 London kill zone, New York kill zone, and then you can target those lows, right? You get a proper breakdown. Like here, this curve up. This is a low resistance. There's no, it's not structure with lows and highs where people may trail their stops, right? Let's say you had a this is mainly why if you had a long, where would you be putting your stop? Most likely at the swing low or at the low, and then you target a high or whatever. Why it's low resistance is because there's so many little lows here. There's low here, like where there's little lows everywhere. There's no real structure, so most likely you're putting at the swing low. Psychologically, that makes sense, right? Just putting at the the bloody swing low instead of you probably get better luck just going any mini miny mo, and and just sometimes okay, it takes out the low, you catch a turtle soup. But yeah, this is not this double bottom, right? And yeah, there's a trade in there, but a lot more probability like attacking these areas than trying to rely on them to support your support price. This is low resistance. It's not the most beautiful. It's not as clean. It can consolidate, and then only after New York, I think around maybe New York lunch. Maybe there's news here, FOMC or something, and then which is usually on, I don't know which day actually, but usually around like 1 p.m. So about 1 a.m. 1 to 2 p.m. New York kind of time. You see some equal highs up here. Yeah, but you have to know where you are in the whole grand scheme of things. You can't just say equal highs. I'm gonna try to look for my long. Oh man, when there's an obvious area that it wants to get to first, right? That's more stronger. So you kind of have to like do the analysis, know where you are in price, and wait for that. Not just an expansion to signal to you, but you look at the candle PD rays from top down perspective, and when it's clear, it's clear. If you're on a higher time frame, then yeah, I mean it's easier to get in on a lower time frame and catch. What's this? Oh, okay, scared me for a second. I say what? Yeah, so that's what I was looking for this morning. Because this is low resistance as well. It's a channel. Very weak kind of swing highs, right? It's not making like higher highs. It's just this crawl up. So naturally, those will be taken out pretty quick. And now we broke down. We took out the sell side here. This is the 3. No, not 3 o'clock yet. I'm thinking around here. Why around here is it's also a buy side here. Why down here possibly is because we go to a time frame where it's kind of maybe you start from a higher time frame. What is this? Was that the breaker? Okay. We'll just use this gap in instead. Okay. It is one candle above, but more than the next candle, but it's okay. Seems to be respecting that. Sometimes conditions aren't easy, but they make it really hard, and you just kind of have to shut off your if you need to, just get in the trade, set your alerts, don't look at the chart until you get your alert that you stopped out, or but at the same time, yeah, you got to be aware of news and have a decent stop, right? So yeah, that gap on the 5 hour. I create those equal highs, so that leads me to think that maybe we get a 3 a.m. move to take that out, right? And from where? Maybe from here? I don't know, but I want to find that. I was framing the short down to this. I was framing the short, right? Because these tend to be taken, these kind of setups, this kind of price action tends to be low resistance. It's just crawling up, like what it's however you think of it, whether in manipulation terms or smart money or even just like if you're just thinking of it as like buying strength, even it's just waning all the way to this equal high, and then it kind of drops. So how I would find a area to take profit most of the time, considering as well, are we in just an overall, is it just sometimes it doesn't trend lines, it doesn't sweep all of it, but it takes a bit and then it just kind of expands. But how I would normally find a gap is, okay, 1 hour, no gap. I mean, find a target, possible target. All right, so we have this 1 hour here. That's already used. Not too interested. 45 minutes. I go down 30 minutes. That's already used. Okay. 20 minute. Time is not, is it used? A little bit, right? You see those wickless candles? Yeah, take note of that. It's very interesting. Glad my brother pointed it out. 15's use, and 12. Nearest one is this 12-minute down there, and that's where I would target R2F as well. It's around this level. That would be a nice slingshot if that formed. I'm saying jump into that. It's a really big expansion down. Yeah, so that's how I would go down, right? From finding that where I can take that where I can take profit from like a short. If I was aiming for that area, if I was trying to aim for a long, that's where it could be a refined a POI to look for a long higher. Because that's a common, crawl up, and then it would be pretty fast. It would be pretty fast. I'm not saying that's what's gonna happen, but let me see. Yeah, it's one of the, it's even like a pattern that I guess people would use. But yeah, swoops up this liquidity and then boom, leaves everyone crying that wanted to go long, right? Could it go lower? These are relatively equal. And there's a big imbalance here. I like these up here. Quite equal up here. This little mountaintop cliff. So I don't know if he'll make another low. What's this 12-hour that was? I can't remember why, but I guess because this one was used, so I guess using the same kind of idea, this 12 hours used. So this is like the earliest time frame, right? If we're going down, that's the earliest, the lowest time, the nearest time frame, because the daily is not, it's used, 12 hour is used, 12 hour here is used, and then this is this one down here. It's a bit far, but possible. It's kind of I don't know, it's kind of in limbo. We don't need to guess anyway. Good. I mean, it can be scary to use a smaller candle PD arrays, but you can practice because they usually hold, right? So you get in here and then like you stop, and you can target the. It came into here, but these are equal lows. I'm pretty sure it's gonna come at least take that out now. But at the moment I say that, it always just for some reason I try not to open my mouth. Because the market just wants to do whatever it looks like it's the opposite of what it looks like it's going to do. But yeah, then, okay, let's say you frame it to R. Yeah, and that's, for me, how I like to risk is, like I'll risk based on my available drawdown if it's on a prop account. So let's say it's round number. Say $100,000 account, 100K account, and then normally on like FTMO you get 10% maximum drawdown. So I'll risk around, I think 3 to 5, 3 to 5%. Usually 5% of the available drawdown, which is 500, which is, if you're going to count the entire account, which you don't actually have the entire account, it's just kind of all it means is basically you get the same amount of leverage as 100K, no matter how much you lose, but you can only lose 10,000. Because normally, let's say you have a $10,000 account, you lose half. Like you essentially cut your leverage in half, right? Because let's say you have a FTMO, you get to choose like a swing account or a day trading account. You can't hold over the day on the day trading, but you get 100, and you can't trade news. And you get 100x leverage. On a swing trading account, you can trade news, and you can hold over the next day and the weekend. But you only get 30 times leverage. So you get 30, so 100K, you get like maximum 30 lots of, around 30 lots of Forex on a 100K account. Let's say you're on a 10K, let's say you're at a real 10K, but you only can lose $10,000, right? But on a real $10,000 account, let's say you had 30 times leverage, you could risk like 3 lots maximum. So you're saying like you can't lose more than 10,000, but they're basically giving you like 300 times leverage, and that's why a lot of people would been a good trade. That's why a lot of fast one. I did take a short up there actually, but I got it late, like somewhere down there. Yeah, so most people, I mean, they blow accounts pretty quick. And if they're using the sound risk management, it just seems so slow. It seems like, because it's a 100K account, but it's not. So in their minds, I made like 200. Oh my god, this is agonizingly slow. But I mean, it's useful. It's better than a real account, because I mean, okay, you pay $500 for a $10,000 account. I mean, $10,000 worth of drawdown, right? And compared to a real account where you actually need $10,000. So I mean, if you're pretty good at trading and you know how not to blow it, you can create some buffer and actually scale the account. Then, well, you can make a decent amount of money. Rather than, I mean, it's always good to like build up a live account after a while. But yeah, it's a good way to, if one knew how to trade properly, right? And actually do like some basic math. So let's see if it comes down here. No wick. I should like make a, I'll call it John Wickless. Yes, I'd probably take profit there. Actually, the 12 minutes here. I think 12 minutes, very little wick too. This is around midpoint of that. Yeah, it looks really bearish, and sometimes tempting to like, maybe I can write this a lot lower, some equal lows, but things can reverse really fast, and then it goes for the buy side here. There. Yeah, any other pair you want to look at? Or you have any analysis of anything? All right, nice. Yeah, the daily was nice too, because we got this candle break. Down. Yeah. Maybe test this trend line as well. It's possible. Yeah, possible. As long as it's not too steep. I mean, you gotta like kind of judge on your chart, right? If the trend line's like so freaking steep, it's unreasonable to expect it to. But you see trend line like that, possible. There's a nice breaker here, very very clean looking. And if we get a gap and then that breaker, it might be a good one for lower prices, right? Because we've got those. Yeah, this is a hypothetical kind of thing, but sorry, yeah. Okay, let me just hide this. This one. Yeah. 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 3-day, yeah. Let me see. Give me a second. Hold on one moment. Yeah, sorry. Yeah, so what you think? The 3-day, right? The structural, this one. Yeah, it's kind of all, it goes all the way there. Yeah. Okay, so we got a low time frame. Let's see what we have. Because if we have a candle PD array, it's going to a structural PD array, or it's going to an area of liquidity, like whether it's equal lows or even like a swing low. We don't have one yet. We don't have one daily. That's one 20-hour yet. 12-hour, I don't see one yet. Got to see whether we even close below this, right? Because we do have this up here. If we can't seem to close below that, then most likely it's going to come back into there, 11-hour. Yeah, I mean, I'm not jumping into like any short anytime soon. I mean, any super long-term short. Oops. But we just go down the time frame, just have a look what we got. 53 minutes for this one. Maybe if this closes somewhere around there on the 4-hour, then it could possibly go and take this one, take out this low. Maybe just that low. I mean, it's completely possible it just screws about here, but I don't know. It's still 3 hours for this 4-hour candle, so actually I wanted to turn off my wanted to just take partials, but I forgot to turn off the take profit, so I think it took profit there. I wanted to take off like half, see if we go even lower. It's okay, whatever. Because New Zealand, because New Zealand dollar is all these lows down there, made me think like, well, okay, if that can go down there, then maybe euro can go a little bit more. But yeah, I think just frame one trade at a time, because it's all about compounding. I mean, the most detrimental thing is thinking about got to get this one big win. I mean, one big win is nothing compared to when you have like an account 100 times the size and it's a small win. You know, it'll still trump that, you know, that one big win, which requires more risk. And yeah, it's something to, I guess, practice, just being really content, and not being content, but being really satisfied with what you have. Not to say what you have is bad, and not to say it's like settling, but you know, you're just kind of training yourself in the right things. Okay, so yeah, this is New Zealand dollar. We want the 4 hour, right? If it closes like that, I say we could target maybe lower. It came into this gap, came into that gap. It's probably a gap on the 6 hour or something. Yeah, a breaker like that is pretty cool. It's not closed yet. Don't make the mistake of jumping into a 4 hour candle 1 hour in. If you got something on a lower time frame, it's best to probably wait for the. Okay, the 1 hour is not too bad. You got that. But this is just something. It's already not something to FOMO in, but it's something to observe and just like be like, okay, we came up during the midnight, right? Midnight is usually a time some shit can happen, and then we spend it down. Let's say it was the 1 hour. There's some equal lows down here, which may reverse. If the 4 hour was like this, then I would target like probably like that. And where else would I target, right? I'd have to look for, I guess one area would be probably here, because it looks very clean. I wouldn't target this remaining gap. It's not, you know what I mean? I don't count it like that. But because there's a gap here, I would go to a higher time frame now, not a lower time frame. Check the higher time frame first. There's none there. You can see we're in this order block here, right? So we have to be careful that this is not just gonna like 3 o'clock reverse in your face and start moving higher. Eventually, after a big move, you know, shorts are kind of getting a little bit risky. So let's check the higher time frames. No, I think it was the 12, right? Yeah, the 12 was the earliest one. It's 12 o'clock BC. But we also have this 12 o'clock that hasn't closed in there yet. So it could come into there first. So nothing that great at the moment. Yeah, came all the way in here. Yeah, that's how I would define the target on probably down here, right? Inside this order block. Maybe at this weight. Just to be safe. If I was going short in that case. But this is what was this? 3-day gap, yeah? Yeah, 3-day gap. Right, so what do we have here? We do have some relative equal lows. Yeah, so it could get to, I think just, yeah, it's just something to observe. But yeah, I mean, I'm interested as well in those really big lows down there, those big equal lows. Gonna time it with some news. Seasonality wise, we just started April. I think you probably have the seasonality chart of the dollar index, right? Or if not, it's like really easy to Google. April is bearish for the dollar, it seems, based on this. I mean, this old chart that I've seen ICT use, but it goes up until like 2017. But it's like 15 and 30 years of average from 1985, and May and April, going to April, it drops in March, and then a little bit of consolidation in April, and then it seems like first week of April, it kind of just crashes all the way into May. May, big bounce, right? For the dollar, which is inverse for everything else, like stocks, which is why they say sell in May and go away. Which is basically sell your stocks, not sell your dollars. And just and just wait, right? And then it kind of tops out in July, and then this is the main areas, like March. Dollar tops out and then crashes all the way to May, and then it bounces from there. This is the first gap in there. If it goes all the way up, I'll be glad I took profit there. Yeah, but you can see how that's I think a good target. It's based off the short, right? That's the first idea. And why maybe not lower the risk of this buy side up here. It keep making buys. It made buy side a bit. This equal highs came up, took it out, made it relative equal highs again, took it out. I didn't take out this one, and then it moved. Took out Asia at the midnight, and then reversed from there. You can see it happen relatively often. Sometimes this one, and then you get the move from midnight to around 2 plus. It came all the way to this. It came to the swing point that took out the low, right? This is the low. This is the swing point that took out the low. It came all the way to take that out, right? Because many people have trailed their stop there. Liquidity anyway. 230, and then we go into like 330, 430. So it's expanding back up. This New York complete consolidation though. That's going into like London close. When it does all these things and bounces at these weird areas, creating trend lines and stuff, I mean, I think most of the time it's setting it up for to be taken out, right? It's not like bouncing on a very clear gap or order block or candle PD array. Like, what the hell is it bouncing at this bloody area? Just like shooting up. And sometimes you gotta wait a while. Here it comes down, and then yeah, curious, because we have some sell side here in terms of this trend line. We could break that, or we could tap into it and then bounce again, and then come back down for that later. We do have this up here, which I'm very I think we're gonna take that out soon. I don't know when. And we have that 2-day candle. We're fairly close to it. Slightly structural. Nothing on there though. So just keeping that in mind. Yeah, if the 6 hour closes like that, then probably, I mean 5, I'll look at the gap, yeah. Probably lower then. Unless the next 5 hour just kind of respects this gap, because it can still respect that gap. Yeah, but you can see it's like not too clear here. It's just like building up all this. This, what do we call it? Like buy side, relative equal highs. It didn't come into any significant inefficiency. Maybe the breaker, if you're cutting across, maybe equilibrium. Yeah, equilibrium, but nothing too significant. Very efficient. So on this time frame, somewhere around this time frame, probably can expect maybe one more load to be taken. Who knows? Maybe it comes up here first and then comes there. I don't know. These are just coming up with like scenarios because I don't have anything too clear here. We do have this trend line that's kind of being, yeah, it's kind of losing steam as well. This might be it, or it might be one more. But based on this time frame, I would at least want a candle order block, candle kind of PD array, like an order block, not a fair value gap, to around this kind of high, around this kind of time frames to head higher. I think on the 9 we came all the way up here and then dump down. So, we could create another 9 hour and then have a 9 hour here. Yeah, we spent so much time looking at the euro, but I mean, you're looking at the dollar, the pound, it's got equal lows here as well. Yeah, so let's wait for the, I mean, you might have to do it yourself, but because it's in another, actually soon, right? The 3 o'clock. 3 a.m. reversal. Just soon, and then we, of course, we check the news. Hold on. News today. Forex Factory. There's a cool indicator. I don't really use it because it's just more crap on the chart, but it actually brings up the economic news on the chart, and just like puts it up here. In a second, I guess. It's gotta fetch it from the. You can edit it and actually, yeah, you can. I'd include orange. I do include holidays, just so I know when it's a bank holiday, right? You can put it automatic. So whatever chart you're on, let's say you're on Australian dollar against the US dollar, it won't show you like euro. Well, it'll show you anything, yeah, USD or pound in this case. So I can just put this folder, put small, It'll actually show you lines on the chart as well. So it's kind of, yeah. I mean, I wouldn't, because my charts already got so many colors and stuff. It's getting a bit much for me. But you can also put it on the top left, top right. It's quite cool. So today it tells you for the whole week. So first, we have US dollar. This is a red folder only. JOLTS, job openings, and ISM manufacturing. Just economic news by 2 degrees. Yeah, I don't know. There's something wrong with my candle tracker. It keeps on. I don't know. The time keeps on. It keeps on changing very often for some. Like now, it says it's the current 8-hour It says the next candle is 9 hours, so it should be 1 hour left. But it says the 9 hours now, so yeah, it's annoying. I gotta fix that. So watch out if you're using that. Oh, well, it's really going. I would have expected it to come down, take out this trend line. Well, it's a bit different on normal chart. Even if an order block is a few candles away, you can always take note, is it respecting it? I'm trying to find one that's more, like this. It comes up here, and at that point you might be thinking it moves up, but as long as it's kind of respecting that order block. Whether it's a candle or a structure or like something in the middle. I don't know, there's a nice trend line here. But it's not yeah, it's left it on there. What could possibly happen? I think we're a new 3-month candle, are we? Yeah, new 3 months. Okay, so I want to see this 6-month be respected, right? Because we still have this 6-month here. This current candle is, I think, important then. Sorry, it's a 5-month. That we respect this order block. Came in once, stabbed open, so it should respect the midpoint. So when you have like a candle, let me find something. Trying to find a candle PD array with something, an objective. I guess we can go to. Yeah, went lower. Okay. Son of a bitch. Maybe New Zealand. Yeah, I wanted you to study you get a candle PD array. How often does it come back to the middle, right? Because that could essentially be doubling your RR. Doubling your RR would be like doubling your profit, right? And you got to see, does it happen more than half the time, right? Because if it happens more than half the time, then yeah, then Yeah. So you can just always frame the range. Sometimes you get this big, it's not counted in those situations. But if you get something a bit more, just let me cherry pick an example. I'm gonna cherry pick this one. Just say, okay, trend line, equal lows, yada yada. Changing the state of delivery. We broke down here. Then you got your block. Then you can just kind of like pop on a fib, and that can be your like trading range, right? Now you decide, okay, let's say I'm gonna wait for it to come to 50%. You get a higher chance of the trade working out as well, I think. Well, not a high chance, but yeah, it depends where your stop is. So if you have to stop at a high anyway, then you can go to the lower time frame. I'm not sure if this already happened or not. So we're on the 2. Let me see if it. Okay. Right. So this was the range, and then now you have this range, right? It did come in. It did come back. Go back to the 2 hour to have a look again. So it didn't actually come back yet. It didn't come back to it. It did on a 15-minute. It went bam, bam, bam. It did come back to the 15%, but it didn't come back on a 2 hour yet. Okay, so you got your 50% here. Okay, it's there. So now you can frame your trade like, okay, if it comes back there, I'm gonna look for an entry on a reasonable time frame based off the 2 hours. 15-minute candle is like 8 candles. You could probably afford to go lower, but not yet, right? Because this you might call this an order block on a 15-minute. Then put your stop at the high. I don't know if it will stop you out, but you wait for it to come back to the midpoint. Okay, in this case, it doesn't even take that out, but if you're getting in here, see what that may have looked like on the 5-minute. Okay, then you have a more refined entry. You may have been waiting for this one. Relative equal highs, then maybe you wouldn't have got it, right? And that's fine. Or let me turn up this. Maybe you wait for the SIBI on the 5-minute, and then you get a breakdown, and then you try and get in on like a fair value gap. I think those are times when fair value gap's a bit more okay to take when you're just trying to frame a trade. It does come back there and then it leaves. I'm not saying you have to like jump in at 50%, or you could even do that, right? Just based off the 2 hour, and just say, if that's your trade, if this is your entry time frame, let's say it's 2 hour and you're catching like something down there, right? Already like 1.4. Whereas if you got in at, maybe it won't always be double, but if you got in at market close, if you market sold at the open of this new candle, then it'd be less. But if you waited for 50%, like this one, okay, again, it comes back up to, not in this candle, but in the next candle. And there's also a gap there, right? Small gap. And if you're late for this one, there's always, it's already at the low, but I think this one would still have a decent move to make. That's why you have, additional analysis. You got a 50%. You got this wickless candle down there. I think it's probably going there, right? If you took this 15-minute, let me see if does this come back to 50%? Maybe not, right? But anyways, good retracement back to the wick. Interesting. It does come back to 50%. Well, it's like later on. I don't know. Maybe it's a thing. Maybe not. And then, you get that. And there you go, like a 2. Let's say you average. Let's say you have a minimum trade setup of 2RR. And using these concepts, that's not it's not asking too much. It's very very reasonable to ask for a 2R. They happen quite often and quite safely. So let's say you're aiming for a 2R, and even with a 50% win rate, it's a lot. I was asking like ChatGPT to come up with some calculations, I guess, just based on, because it easily can just randomize trades, right? I'm like, okay, 200 random trades of wins and losses of 50% win rate, 2R, and risking 5% of my maximum drawdown, right? So start, 200 trades, start of 100K, and it's risking based, I believe, yeah, risking 0.5%, correct. Is that right? With 50% win rate and 2R compound risking risk. Yeah, so even starting with 100K risk, 200 trades or 50% win on 2R, the max balance would be like 1.4 million. So already 14x at because of compounding, I guess, at 2R. And of course, if best five 80% 4R, no, so some obscene number, trillion. What's after trillions? Yeah. So because I was trying to calculate, trying to get it to help me, like what is it, like the sweet spot of risking based on available drawdown, right? Because then it's kind of, it always scales. So let's say I say 5% risk of available drawdown on a 100K account. Let's say it's a fresh 100K account. That's $500 risk per trade. If I lose the first trade, I'm down to 9,500 available drawdown times 0.05. So I can only risk 475 for the next trade. So yeah, whatever you're risking, you're always kind of 20 loss streak from blowing your account. I mean, you'll never blow your account because it's like a reverse exponential. It's an exponential curve that slows down, and you'll never. So you'll be risking, a bit less. You essentially be risking 5% less for every loss, but then you win. Like if you, So if you win a 2R trade, okay, now you have 11,000 times 0.05. Your next trade you're risking 550, which is already 10% more. Let's say you double this account, right? Which is essentially what you have to do to double your drawdown. Essentially, you gotta make 10%, which is doubling your available drawdown allowed, right? So I mean, if you then you have made 10,000, you're at 20,000 available drawdown. You're risking 1,000 per trade, and risking 500, and 2R winning quite a bit. It doesn't take long to hit that amount, and it compounds really, 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 really quick. Yeah, so ChatGPT is quite good. If you have any like risk ideas, you can share it with it, and it can kind of help you out. My brother, he wants to do it a different way, where he risks very low at the start, and then he earns his ability to Yeah, so he starts a real risk, like he's not counting drawdown, so let's say 0.01% of the whole account, which is like, let's say 1% of available drawdown. So like 100K account, he's risking $100 until he gets to like 1,000, and then he can risk $200. If he gets to 2,000, he can risk 300 or something like. It's kind of like earning your right to increase your risk in a way. Yeah, so it's kind of, yeah, you're just risking slow, and then you make money, and then you're allowed to kind of like, yeah, it's kind of, yeah, it's basically what I said. It's just like earning your right to risk. Yeah. Yeah, there's many strategies for like passing accounts, and of course, if you have a live one, then it makes sense to like not blow it, because this is, the whole point of having a funded account is to have that funded account and not lose it, because you got to do a challenge again and all that. It's not worth it to gamble with that account. So people generally risk less. If they're doing a challenge, then sometimes they just risk more in an attempt to get the challenge over with, and then have that funded account that they can trade with. And it's fine if they really know what they're doing. If they're not susceptible to this bad habit of those big wins, right? Just conditioning yourself to these big wins, pass my account in like 1 or 2 trades, which I've done in the past, and then I've also like blown the account as well, because you kind of programmed yourself to expect those things. You know what I mean? That's why I said like be satisfied, find satisfaction in like, wow, okay, a 2 hour trade, I got it for the day. I'm done. I don't care what it does. I don't care if it goes to my 5-month target right now, and that's actually like a 50 hour. Just take the trade as it comes, and yeah, taking it at appropriate times is, unless it's a very a PD array on the weekly, or something like that, and it's kind of a decent. It's an order block that's not too much of a body, and you can kind of get in at a, let's say here, for example, you just get in slightly at a market buy over there. You got this is a slingshot breaker, and then you're targeting, let's say there's something down there, and then you can get your 2, 3, 4 R. Then that's fine, but you don't have to get in on you don't have to pay much attention to the news, or sorry, the kill zones. But if you're trading, intraday, when you catch these kind of moves like this, don't get it during London. Don't try to catch a, something during Asia. You get this, okay, yeah, busy, it's moving up, it's order block, came down to this wickless candle, ironically. Here's a real busy, and then it crashes down. Yeah, but if you get it at the right time, having this indicator is useful for spotting those things. And not every day is easy. Some Londons are. This one comes out and takes that, and 3 o'clock. I guess because it's relatively equal highs here as well. But the more you trade, like couple of pairs. Like I like Euro. I think probably Euro and New Zealand dollar right now is the one I've watched the most. Sometimes some of them are interesting, but then they don't move very well. Like CAD, I was watching CAD, and yeah, I was anticipating it coming lower, but kind of stopped here at this. This took out this low. Okay, I got the 4-day lower, but took out even this ERL range, but then it just reversed from there. And then, yeah, I mean, it's good to, I thought it maybe wants to come down to here. And it might do. Let's just see if this is respected, right? This order block is still respected or not in this next 4-day candle. So we do have equal lows here. Keeping that in mind. I do like this Caparuni here. And on the 2-month, what is that? 2-month not yet in there. But I mean, that's why it's good. You don't have to trade every pair, but analyze the different pairs. I don't know. Take them into kind of consideration, but maybe not too much. So I don't know actually if that's a good idea, because I remember I used to get like tripped up because it's because yeah, because sometimes you get the buy side on one side, you know, okay, this got sell side here, and then you go look at New Zealand dollar, there's sell side there, and they can have a crack in correlation, and one can completely move on this time frames like the daily, both, especially Canadian dollar. It's just kind of like it's I don't know, it's some kind of imposter. It's like some kind of it looks like Canadian dollar against the US dollar instead of the US dollar Canadian dollar, because it keeps on moving very similar to, you know, all these other pairs compared to, and a lot of times it moves along with you know, like euro. You see like euro going up, and then look at CAD, it's like I'll go up too. And yeah, so it's a bit funny. So Canadian dollar, yeah, it can kind of do its own weird thing. You can see this bounce right here, and then came up, and then what's this? US CAD. Okay, so how do they call it? Buy side. This candle's not closed yet. Actually, let me see this. I'm looking at Swiss franc, like wondering when is it going to come for here. But you know, this chart is so ugly. I'm not gonna. I think eventually, where the discount, buy side. Is this a trend? Is this a trend line? Roughly. Imbalance 1-month R2F. I think it's a breaker. I mean, it's something that usually you'll get price coming up there. It's just, and if, yeah, down, yeah. So we still have a candle Sibi here. Okay, so yeah, we have this that's already used. So let me check the monthly. All right, so there we go. That's the one, right? It could wick into here as well, but yeah, I mean, of course, this is like framing a short or something. Framing a buy, yeah, okay, consider it possibly wicking into there. So 2-week, 3-week, there's also probably come into there. It already came into a 2-week, a little bit of a drop, and then 1 day for this 3-day. Looks decent to come into there, but it's so close, who knows? And it's not closed yet. So I think we could probably do it in these candles. I was looking at this earlier today. We were around there, thinking why it would come down. I don't know if it will retest this trend line and then go up. seems like it's already wants to do its thing. This consolidation took out the sell side and then expanded up. It's like a refined area. It's a possible area inside of this. Goodness. 3-day, what is this? Yeah, I mean, you can see this was used as an inversion gap. And a CB. And a CB in here as well. I want to remove it now. And just focus on this 3 week here. So it actually did come down, and now it's yeah, very cool, very cool. Okay, let's say I'm basing out this 12-hour, maybe coming in that, maybe not coming into a gap, 2 hours for this, but maybe coming into this wick, right? How it would do if we, because we closed above, right? And what do we do? Come down and then go for ERL, right? We like how we would use inversion gap or order block, and then create maybe a breakaway gap. Who knows? But if I was waiting for confirmation, touching, and then let's see what time it happened as well. Maybe I'd probably wait for a candle PD array, maybe on the 2 hour or 1 hour. Big void touching here. Maybe let's see. Okay. Maybe if we get a close, yeah, we have an order. It's kind of like a breaker, kind of like order block coupled with inversion gap. I had a name for that. I can't remember what it's called. It's 1 hour here as well. Yeah, so there's a 45-minute gap there as well. Interesting. Let's see. But the 3 hour, there's also a gap in there. Yeah, it could come into here and then, you know, bounce on this breaker and then come and bounce on this breaker. Safest way, you know, because huge expansion, right? I know it's very balanced in here already. Price has been offered a lot in here. Sometimes, so it can move fast, but generally when you get these fast expansions, price usually comes down equally as fast as well. Yeah, you just always have to watch out for those FOMO kind of candles where it's like, well, it just keeps going. It's just inefficient and manipulative at times. Yeah, where was that 3 hour? One more here, right? 3 hour, and then we go to the 2 hour. 3 hour is a long way to close. The whole thing is a 4 hour. Was there news earlier? 1:30 p.m. Yeah, Swiss franc yellow news, retail sales. 2:30 p.m. again, yellow news, manufacturing, PMI. That's my time, so yours is 2:30 and 3:30. But yellow folder. We didn't get to 3 o'clock yet, I have to watch out for that nonsense. Oh, lucky I didn't chase that. Equal highs. Mm-hmm. 8 minutes. Yeah, curious. Very curious. Yeah, well, there we go. So that'll be interesting. But it's not almost 3 a.m. 3 p.m. 3 a.m. Yeah, things like that. Normally, might worry about this trend line a bit, but with I know some experience, like watching whatever chart you like to watch, you know it's tricks what it likes to do. Yeah, we can wait like a few more minutes and like 10 more minutes, I guess, on call, and then see what it does. It's the Australian news. Forgot to check 2:30. No. Yellow. Only 4 p.m., 5 p.m. your time. Orange folder. Core CPI for Euro. Here's a more clear breaker. If we do get a retracement, the 9 minute, that would be, yeah, it's okay. And what was that? What was it? Okay, it's 12 minute, right? So this was our refined spot. See how Euro's doing. Taking a poop. Okay. Little bounce there, faking bullishness maybe. This could be a market maker model, possibly. You know, consolidation and then the reaccumulation, turtle soup, low risk sell, kind of. Low risk sell would be maybe something like that. Then turtle soup would be up there. I don't know what it's turtle soup in. And then somewhere there would be like a first stage distribution, or it might be there. I don't know. It's you know, it's kind of like snowflakes in a way. Question is, could it bounce from there? So we can build an argument of whether it would bounce from there. Based on this 3 hour, possible. I mean, we do have this gap here with these lows, so that could be catalyst for lower prices. What is this? Who has the equal lows? New Zealand dollar? New Zealand dollar has the equal lows. This is in 2nd Feb. So I want to see where's that second, same area. Let's compare the so New Zealand dollar has a more bigger draw on just equal lows. Maybe, I don't know if that would be true. The Australian dollar would be stronger than, so the Australian dollar should go up. Australian New Zealand dollar should go up. If, I mean, just based, I mean, I don't know how true that is, but it's based on the idea that the New Zealand dollar has these equal lows and this Australian dollar doesn't. Would that make the Australian dollar weaker, stronger? Maybe. Come on. How equals are these highs? Holy shit. No, it's pretty equal highs. I think that's a good draw on liquidity. Yeah. Oh, did I draw here before? Yeah, big draw on liquidity there for Australian dollar. Means if you were shorting something, probably short the New Zealand dollar, right? Okay, this is interesting. You still there? Alright, no problem. It's alright. We got that. Oh, do I have this on? Yeah, I did. Yeah, I just pressed it for me. Yeah, I just wanted to. Right, we got this inversion gap. Pretty near, right? It's not like miles away. And we got a slingshot made inside of it and a close above. That's like, you know, that's a inversion gap, order block, slingshot. Well, you can call it a BISI as well, but slingshot is the order block and the BISI. Hold this inversion gap. That's a pretty high probability to, I think, go higher, right? Generally. And if you're not yet at a equilibrium, then it's got it high. So this is a 2-day candle. See what that looks like on a 1 hour. New day starts. What happened? It's weird. I can't seem to replay that. I just wanted to see when was that. Maybe that one. Or that one. First April. Maybe that one. Yeah, so if you're gonna short something, short the weaker one, right? Or the one where it's like, where's the draw on liquidity? That's weird. I could have sworn that high wasn't taken. Oh no, sorry. Oh no, yeah, it should be on this chart, no? Oh, I guess I was quite zoomed out. It looked like it wasn't taken. I mean, practically not. Very little. It's still a draw. Took it out a bit, right? Went all the way down here. That was like no gaps being created here. You see that? It's like very efficient. There's no gap here. Took out liquidity and then create this inversion gap straight away. It's like the first gap that got created. Took out some equal lows. Boop. Yeah, interesting. Where is it? Oh. Small gap in there. Yeah, you see that? Gotta watch out for those. Equal lows here. Yeah, there's still a gap here of this stings. I mean, just might come into here. Equal highs, but I'd be surprised if it comes all the way up. You lose a trade like that. It's time to. If you lose, that shows that it's just being it's not playing nice for most people, at least anybody's. If you see those, like, just from experience, just let it go. Just let it win the day. Trying to like get revenge on it, like, no, you son of a bitch, I'm gonna get you. I'm gonna get the move. Yeah, just never. But if it, of course you should trust the setup, right? You can't assume every day is like, the market is like, unless you're just wrong and you just don't know what you're doing, then, that's obviously your fault. Not making it easy on euro, I tell you that. Pound is at least pound comes to this breaker. Euros, sheesh. Not a nice guy. Okay, goodness. Here, this one. Not a slingshot. I mean, it's an auto block, but it's not a slingshot. Is just like a higher probability, but it's not a. I'm gonna call it a slingshot. Yeah, I mean, it's possible. All I see is a wickless candle, which is, yeah. I do want it to get that. Just gonna check what's there. Okay, this looks promising down there. These equal lows and this gap. This R2F was already tapped into. See this candle? I mean, every candle is, most of the time. I mean, okay, one candle here, right, close, and now we are next candle, coming to this low, and then move usually. So, candle by candle, it's kind of doing something. Yeah, well, that's cool. And there you go. That was pretty nice. I recorded this, so if you ever want to watch it, because I'm using my brother moved out of the office, so I have a little bit more. I can use my actual setup instead of my laptop. And all right, I will stop the recording.